In this series of screenshots, we're going to be talking about the use of our indicator as it relates to the home run pattern. The home run pattern is simply getting into the trade at the optimal time and being able to hold that trade all the way up to the first standard deviation calculation using an IB approach, an initial balance approach where we establish a threshold, two thresholds, one at 1.5 standard deviations and the other at 2 standard deviations above the initial balance, and then we look at how the indicator allows us to generate a very effective home run. So we're going to look at, first one is on 1019. So let's take a look at how that developed. Now the home run level was at 2140.50, and your first oversold condition from this low level, this low threshold level here, it shows up right on time, right on the money. So in anticipation of hitting this home run level, we watch carefully how the premium is developing, and we got a fairly strong overbought situation right here, but that's not yet where we need to be. So even if you got out prematurely, shortly thereafter you had an oversold condition right there. See the oversold at a lower low right there, and then we move up strongly again, and we get overbought right at the 2140 level, right there. And then it squeaks up a little bit higher. We get another overbought situation right there, right in there. So easily made that 40.50, and even made a little money if you shorted it at this initial, and then got back in the trade over here. So overall, that home run could have netted from say even 33, just in round numbers, all the way up to 40. A nice 7-point move. 7 points now. We're not talking 7 ticks. We're talking 7 points. Nice move on that home run from the low up to the high, and the indicator was very clear about where those threshold levels were. Let's take a look at another example. Going back in time to 1014, you had a real nice home run down to this first level and even exceeded that and continued to move down thereafter. So let's take a look at how the indicator performed using both of these threshold levels shown here. Now in our second situation where we have a real nice home run, we have a high here, and sure enough, the indicator shows an overbought situation right there at the high, right there at 43.25, and you're looking at 34.25 as your first threshold, 31.25 as your second. Let's see what the indicator actually shows. We short it there, and we come down to an oversold condition right there. There's your oversold condition. And where is that? Right below that initial home run threshold. So there's a low here at 33 from the high at 43. That's a nice 10-point move. 10-point move. And then it's not even over yet. You've got another overbought situation. You got this high on the premium here, okay? And then an overbought situation develops right in there. So you short it again, and you come right down here once again, and you got an oversold condition one more time down there at 672. Okay? So you made another 4 points. Pardon me, 3 points. Well, actually, no, it was 4 points because it didn't get oversold until it dropped down to 30. Okay? Beautiful. Beautiful. Don't get better than that. All right, let's look at another example. Now, our next situation for looking at the home run is on the 13th. And we're moving up to a real nice move up if we should get there. Let's see how this performs. Now that first level is at 25, the next level is at 30.75. And the low here, all right, the low winds up being down here at 8. This is a huge move, okay? And the indicator shows an oversold condition right there at the low. So, if you didn't happen to take profits and wanted to wait, you could have seen how this would have developed. Now, you've got an oversold condition over here. You get another oversold condition right in there as well. These yellow lines. The premium is stepping up and continues to step up. Here, well, there, that's a drop. That's a drop, and you can expect that that's going to result in more of a drop. And there's your oversold condition right there. And up it continues to go. Now, to make this a little clearer, we're going to change the start time, as we frequently recommend that we do that. And change that start time right over there at 11:15, because we have a higher. Okay. So we get, let's see here, we're a little overbought right there when we tag that price, but then we immediately exceed it. We don't get another overbought situation until right in here. So let's spread that out just a little bit so that it's a little easier to see. There we have it. Okay, so the first overbought condition is right in there at 627, and then at 625, right there at the top, right as we hit that 25 level, it shows up again. So there's your first exit, and right on time, right at that threshold, which of course everybody knew that it was there. But now, getting back in for the final move up doesn't take place until just a little bit later. So as we extend out the rest of the indicator through the balance of the day, as the market comes down, we have this low threshold here. Now this is fairly low and not a real good place to be trying to enter a trade. But then we've got a lower low, but a higher low on the premium. This could serve as a good entry, but no sooner than you're there than you're overbought. And that's a good indication that something's not quite right here, because the premium, the highs of the premium have all been dropping here. And then again, you're back to that situation again. Now it comes down to the low, hits a pivot, but we're still at a lower low. This would not likely be a good place to jump in, just because it's so low. The premium is so low here. That's almost predictive. But as the market moves back up and begins to retrace, you have this oversold condition here, and then another oversold condition here with a higher low on the premium. Now that's what we're looking for. That's a good entry. And so we get in here and we ride this thing right back up to that threshold. And as we do, you see how the premium is just pushing up, pushing up, pushing up. And then finally, we don't get to this other there we get it. We don't get to another overbought condition until we're way up here at the high. Okay, and then the premium begins to drop once again. Okay, so we're right up there at the high. So it made it, and you could have either entered here, entering it here, and if that wasn't good enough, entering it here, okay, or even better, entering it right in there, and we'll get it lined up. Right there at the higher low. It's a good place. The higher low is a very good place to be entering a long trade. It's very safe to do that, even right in here. You're at a higher low, and then you finally move up. So, works very, very well. Let's take a look at another example. Oh, and by the way, that was well over a 10-point move. 15-point move. All the way up to 30. Not bad. Now our next situation is on the 11th. On the 11th, you can see we really made a real significant drop. And this first and second standard deviation lines are both hit. Now those lines are at 32.75 and 25.75. But it's very hard to pick off the short right out of the gate. The indicator doesn't really show us a overbought situation until right there. There's our first overbought situation. And then we take a real fast drop from 48 all the way down to 44. And we get oversold in here. And in fact, do see a bit of a move up to an overbought situation right here. You see the OB, the label OB right there, that's overbought. And then the market really begins to drop. And you see another low overbought situation right in here. There's a little bit of a move there, then an over. Pardon me, that's an oversold, not overbought, oversold condition right there. And then an overbought condition right in here. The market continues to drop to a lower low here, so you don't even want to think about that. And you're finally divergent right here, right as you penetrate through that first standard deviation level. Very nice. Very nice. That was very predictive. Very predictive. So whether you entered it here or entered it there, that was a beautiful move from even 46 all the way down to 32. Okay. Now, it kept on going down. Could you have anticipated where that was going to happen? And the answer again is yes. I'll show you how we can analyze this. Now, this is an oversold condition. And as the premium steps up here, we get this big drop in here, right there. It's what we call like a naked bar. And that's a pretty good indication that this thing is going to drop down. So even if you took a short at this overbought condition right in here, it did move down, but you ultimately get stopped out, and the market moves back up because you've got another oversold condition in here. As it turns out, this is a little bit higher than this is. Well, actually, it's quite a bit higher. It's quite a bit higher. And so, at the same time, though, this is a higher low. So this should be higher than this. But it is still lower than it was here. So that's still somewhat of an indication that this thing is coming down. But instead, we get a lot of buying going on. And we don't get an overbought situation again until right in there. There's your overbought situation. Right at the top. For another opportunity to short this. And down she comes, and we don't really get any divergence. In fact, we're even at a lower low there, so that's going to continue to move down. And we don't get any divergence until over here, as you can see on the screen. Where you're at a lower low and a higher low on the premium right there at the second standard deviation line. It keeps on going down, but at least you made it there. Got overbought again right up in here. Right there. So, worked exceptionally well, as it always does. Well, maybe not always, but very well on this day as well. Huge moves. Let's look at another example. Now, the indicator shows us a big overbought condition right in here. Again, the market is just plummeting very, very quickly as it drops here. And we get an overbought condition right up there at the top of that move. So we're at around 55 right there. And 39.75 is the target. Okay. So there's a 15-point drop if you can just nail some of this. Now, maybe that's a little too scary to get in right here. It's too bad. But nevertheless, you do get into an oversold condition right in there. The market moves up. So if you're a little squeamish about getting in there, you've got another overbought situation right there. And if that doesn't happen, you get another overbought situation right there. Okay. And the market then moves down. Now, as you can see, as it comes down to this threshold level, all right, the premium is stepping up. So that indicates this thing is liable to move up a bit. And it does. But as it does, you get an overbought situation right there at the top, and another one at a lower high over here. And then you finally get the true oversold situation right in there at the low, managing to pull out this entire trade. Absolutely beautiful. Absolutely beautiful. So that's what you can expect from this indicator, because that's how good it is, and it is fantastic. So that's our just a little recap on the home run opportunities using this indicator. I'm Rod Kusin in Spoon for Risk.